Good morning. We are live. What's going on, guys? Hope you're all having a good morning here so far. Let's get right into it. We're coming in for a test of Tier 1 level 22,000. So we have a few things here to think about. We are still, of course, in a range market. That has not changed. Betting on big, giant 800-point breakouts right now is not going to be a great idea. Sure, maybe it'll work, 10% of the time, but that's not what we're after here. The math doesn't add up in that equation. So bottom of your screen there's going to be the daily chart. Of course, again, still range market. 22 has been kind of a problem here as of late. We've been struggling around there for a few weeks. So let's see what the bears are able to do as we come in here to 22,000. Again, that is going to be a tier 1 level. Good morning, guys. Trading Chris, Tony, what's up, guys? How we doing? We're getting some headlines, by the way, coming through from a Fed speaker. Honestly, Fed speakers in 2025 aren't moving things too much unless they really hit something hard on tariffs that we didn't really know already, okay? The only headline we've gotten so far is they said tariffs are likely to have a small impact on inflation. As far as market movement, nothing tremendous here. So we'll keep an eye on headlines. I'll let you guys know if something comes through that you need to be aware of. But until then, we're cool on news. I think we're good here. All right, how we doing? What's up, guys? Giovanni Joe, good to see you. Kane Prince, what's up? How we doing? So, again, I'm watching 22,000 right now. I'm interested in getting long, though I'm looking at the bottom of my screen there, again, the daily chart, and I'm thinking, all right, well, last session, the high was low 22s. That leaves plenty of room, though, if I were to get long through 22. And the high in general here is about 22.3-ish. But 22 has been an issue. Okay, so we're going to keep an eye on that. And essentially, every breakout today, I have to assume is going to fail until I get hit across the face with something down the line that says, hey, this is a trend market now, it's time to trade the trend. And that is when we can start putting up some big numbers. We've had plenty of $10,000 plus days as of late. I want to start posting some $20, $25, $30, $40,000 days. But right now we just got to scalp and see what we can do. And hey, if there is a trend that we can catch, we'll try to do so. But I'm not going to take big bets on that occurring because the probability right now is very low. James Mitz, what's up? How you guys doing? All right, coming into 22 here. You already see we're starting to slow a little bit. Major reversal here off the open, though. Okay, now in a big trend like this, by the way, another thing that I'm thinking about is if we get like honestly, I prefer 3. The problem with looking for 3 consecutive bear bars closing near the low for confirmation to enter. The problem with that is you end up waiting so long that you end up getting an entry And then you see this all the time. This happens like damn near every day lately. If we wait for confirmation that much, you end up right at the 50 EMA, right at the 50% retracement, and that causes a problem. So I gotta tell you, I'm not against taking a stab off of maybe 2. Because think about this. What does that do? Right? It keeps the risk smaller, but yeah, it lowers the probability. But the reward to risk is better. Because maybe you get an entry up here with a lower probability than an entry down here with maybe a slightly higher probability because you have more confirmation. But even that being the case, we have to start thinking, well, maybe probability starts to shift against you because now you're at the 50% retracement and the 20 EMA on the 5-minute chart here. So again, we got to make the adjustments on the fly to the best of our ability. I'm not huge on entering after 1 bar if it's inside of the previous bar's open. If this bar were to close like down here, that'd be a stab that I'd be willing to take. Risk is less than 50 points. And potential reward is more than 50 points. Okay, so we have 2 minutes and 55 seconds left here on this 5-minute bar. Let's see if this turns into a bear bar closing beneath the previous green bar's open. Okay, and if it is, then I'll have to think about placing a stop limit sell order. Maybe 1 point below the close of this bar, if that makes sense. Fed's Bowman, headline here. Fed's Bowman would support a cut in July if inflation remains subdued. This is the thing with the Fed, man. Everyone looks at these headlines and is like, oh my God, like as if we don't know this already. Every time they take the stand, they just repeat themselves. But that's the Fed's job. We'd all do the same if we were in their shoes, realistically. So their job is to make themselves look good, right? So try to do your best to understand that. Don't just get mad at them. Understand that, and you know what? Probably, unless it's moving the market hard, know it's out there, but look past it. There's going to be a lot of people trying to trade Fed headlines, and they're not going to make any money. It's all 50-50. It's all baked in. And the Fed stuff, a lot of people, I think the headlines are more meaningful than they really are. Again, sometimes from Powell, we'll get a meaningful headline. 95% of the time from these Fed speakers that aren't Powell, it's a whole lot of nothing. Any movement would be an overreaction. Well, this bar is, this was a bear bar and we're bouncing, putting in a big old wick. Again, I wanted to see this close here. And if it does, or if it did, it doesn't look like it's going to anymore, I'd sell that rollover. Look to get a little bit of a pullback from 22. Looks like the bulls are really trying to step in here, though. Bruce, good to see you. Steam, how we doing? Mitch just passed 3 take profit trader 50Ks. First time since starting in January. Good work. Good work. It feels the same. When you're trading, aside from the drawdown going from, day to day to trailing, it feels the same. So just take it easy. Don't trip over being funded. It's the same thing. Take it small, and with Take Profit Trader, you'll be at payouts before you know it. Daily payouts, which is very nice. All right, 4 minutes, 18 seconds left here on this 5-minute bar. Again, as the weakness starts to show cracks, you're more and more interested in getting short. Taz, how we doing? Okay, again, if we can get this closing beneath, I'll say 56. I'm gonna say 55.50-ish. I mean, really, a close 55 and below would be a rollover sell for me pretty much right away. And depending on the close, I would either use a stop limit sell or just a market sell on the rollover. ATR, by the way, sitting at 37, which is pretty damn good. Vinny, Nico, I've been curious. Have you broken down your average risk percent of your total available risk capital per trade, i.e. 5%, 0.5%, and so on? Feel free not to answer. No, I'll answer. I get way more in depth with this with the one-on-one people because it's very, if I just throw out a number, someone's going to run with it and not understand the context. So I'm not going to do that. But in a personal account, I think anywhere between 0.25% and 2% per trade. You could even push to 3% if you're trading futures, where you have a bit more of a predictable risk profile. Anywhere from 0.25% of your total capital at risk per trade, up to 3% if you're young and you want to be very aggressive. And if you blow up, you can come back from it. Man, a lot of people, they're risking 10%. 5 to 10% in a personal account of their money per trade. Now, when I say risk, by the way, I don't mean money in the trade. I mean the amount you lose if you get stopped out. Now, that assumes that you're actually running a live stop or you have the discipline to stop yourself out when it gets to that point. The Fear and Greed Index, by the way, for the first time today, dipped back into neutral. Who cares, man? This market's not moving at all. Should have been in neutral for the last 6 weeks. Okay, so we have 30 seconds left on this bar here, and after we just took a break with that smaller red candle with a big wick beneath, I gotta tell you, if we can get a nice clean close up around 22,010, close to that level in the next 10 seconds here, I would get long. Yeah, we're not gonna get it. No trade, gotta hold off for now. Ideally, for us to get a big trade, which I don't care, right? I mean, just trade what's in front of you. I'm not always coming in for the day like, okay, I'm looking for that $30,000 trade. No, man, if we can get some, hell, if we could get some $2,000-$3,000 scalps, man, I'll take it. The big trade, when it sets up, we'll recognize it and we'll put it on. But, right now, the environment, it's just not too forgiving to have that big swing. Any prayer of having a big day, whatever that means for you in this market, is going to be from trades, smaller trades adding up. So for us lately, that's been, 2 or 3, 5, $10,000 trades. 10,000 has been like pretty much the biggest swing we've been able to pull out of this market, just because we're not getting big point moves that really justify leaving it on. Doesn't mean you can't make big money though in a range market. You just gotta take more that add up. You know, I gotta say though, a lot of you guys, when I ran my poll, I ran a few polls. I said, well, hey, what's your goal? And a lot of you guys, your goal, you were looking for, you know, if you could make like $1,000 a day. You know, what was the other one? It was 10,000 a month, maybe $1,000 a day, which would be like 20,000 a month. That would be huge for you right now. And I gotta say, man, with the prop trading, especially, if you just scale this horizontally and you know what you're doing and you have a blueprint that works and makes sense, not just, hey, I'm gonna take big trades and pray. If you actually scale the thing horizontally and you have setups that you are pretty damn sure have edge and you're managing things well and you're not making big mistakes, like, you know, if you can help it, not blowing all your accounts in one day, barring like a copy trader glitch or something. That's so reasonable, man. 10,000 a month, $1,000 a day. Come on, man. That's so reasonable. Stick with it, scale this horizontally, and I'm telling you, all of you can get to that point if you just stop the gambling behavior, the hold and pray. I'm just gonna put this on because I'm bored. What's more important, entertaining yourself or getting to that goal? Which again, let's be honest, I mean, to go with the title of today's stream, if you're saying, okay, you know what? If I can make $1,000 a day every business day, that would change my family and my life. Great. Respect. That's your goal. But if you're coming in and you're putting things on because you're bored, you know what you're telling yourself? You're saying, hey, entertaining myself at the screen here is more important than my family. Straight up. And you should feel like shit about that. All right, we're getting a few more bear bars mixed in here. So this is starting to show cracks, man. I still... It's going back and forth. I really don't care which direction I have to get. Whatever presents itself first, I'll put it on. But right now we need slightly more information. This is what I mean, guys. Find a pattern that you like. Look at this. If you've been on the stream even 2 other times, you know exactly what I'm probably going to say right now, right? We get this tight, hard push upside. We've seen it downside too. Lately, it's been more upside. See this hard push upside? And then what do you get? A couple more wicks than normal, right? A bear bar mixed in here or there, even if they're really small with wicks on the bottom. That shows a difference in balance between this move and now. A lot of times what happens lately is we're seeing this turn into trading ranges. And then you get a second leg after a little while or dump off. So the further this develops into a trading range, the less willing I am to be taking breakout setups, the more willing I am to be scalp trading inside of that range. Context. Peter, good morning. How we doing? Okay, so you see this, guys? We're probably going to enter a trading range, so more than likely what this is going to do is going to pull back, bounce around for, an unpredictable amount of time, and then break. So rather than just getting big short here and holding for a push downside here, what I'd be more inclined to do is wait for a push, small bull bar closing near its high, and then get long off that bull bar for a push back up toward the upside of the channel. This is the thing, guys. Jones, he says 200 to 300 per day can take care of my family somewhat comfortably, and anything above that will go towards paying off bills. Listen, guys, again, if you have the proper guidance and you're trading multiple accounts, let's assume you're going the prop route, you're scaling horizontally, you're going, at least 5, like minimum. You're going 10, 15, 20, 25, 30 funded accounts. You'd almost have to work to keep it that like small collectively, 200 to 300 a day. Because with Apex, you have to have a certain number of days over a $50 profit per account anyway to take a payout. So to stay on track for payouts, if you're running 20 accounts, your minimum that you can even make to take payouts is $1,000 a day collectively. That's like the minimum. Like they won't even let you make less than that and take payouts. A lot of people look at this prop thing, man. They're like, oh, it's a scam. They're here to make money. It's like, no, it's an opportunity. You can cry in the corner while everyone else takes advantage of it while it still exists. Who knows what that is going to look like in 5, 10, 15, 20 years. Or you can hit it hard and take advantage of it. Joe, I'm up to 15 accounts. Are those funded, Joe? Going big, brother. Using big. Yeah, I know you're probably asking Joe here. My opinion here is you gotta have both. You gotta run both. I mean, if you want the best opportunity to make this work, both is the answer, because Apex lets you go to 20 accounts, which is huge for scaling. But in the meantime, if you have, if you're trading reasonably well and you're able to make some money, Take Profit Trader lets you take the daily payouts, which funds your lifestyle and helps you fund the scaling process through Apex. So you make money in Take Profit Trader, whether it's 1, 3, 5 accounts, pro accounts, you pull the money out, it helps you pay your bills, it helps you keep you chugging while you're making this work, and then you scale massively with Apex and other prop firms. Don't get married to one firm, man. I feel like a lot of people are like, well, should I choose Apex? Bullinox seems really good, Tradeify, just hit them all. My plan is to just hit them all. Right now, my top two, Apex and Take Profit Trader, in no particular order. I think they're very synergistic. Take Profit Trader helps keep you afloat while you're scaling, which, most people I think are probably going to need. And then once you max out Take Profit Trader and Apex, then you have 25 total accounts, 20 to 25, depending on the day, right? And then you can hit maybe Tradeify or Bullinox or whatever you want. But by then, it's off to the races anyway. You're probably full-time. You probably don't have to work anymore. Nah, I haven't had this issue. Eric, when you win accounts around here, you have them very, very quickly with Take Profit Trader. When we do giveaways here, the last winner had his account within a few hours. He could have traded it same day. Oh no, took my first payout last Friday at Take Profit Trader, dealing with a whole new wave of emotions now. Yeah, listen, when the money hits your account, I get it, man. The first time that money that you made trading actually hits your bank account, it's kind of a weird thing. You would think that it feels like, oh, I printed this out of thin air. And I guess, it kind of does, but you also know how hard you worked for it and the emotional roller coaster it took to get it. And when it hits your account, especially early on in your career, you'll see it. And let's say, your first, let's just talk in payouts. Because a lot of you guys, the first money that hits your account is going to be from a payout, from trading, right? So let's say that first payout hits your account, it's $2,000. I don't think you're going to look at that and be like, wow, that's really amazing, for a split second. But I think more than likely, you're just going to get pissed that doesn't say $200,000 or 2 million, because you know what you went through to get that 2 G's, and you're like, fuck this, let's go bigger. 2,000, that barely pays the bills at all. I want 200. I want 2 million. I deserve that for the emotional trauma that I went through, however long you've been at this. I think that's more the feeling for most people out here. And that's good, man. Use that. That's fuel. What did we just talk about, by the way? What did we just talk about? Trading range. Predictable. Scott, Nico, I'm curious, what's your opinion on building algos to trade for you to help manage the emotions? Have you ever built one yourself with your knowledge? I've messed around with them. Robots are cool. I like them. I prefer them for things that are not trading. The problem with using them for trading is I'm better than an algorithm right now. Algorithms are really helpful when you have to do something very quickly, like spread arbitrage, or something that I can't do as a human. Like the algorithm sits around and maybe builds out bigger positions, or maybe, an HFT firm is looking at orders on the spread, and it's like, yeah, okay. I could hit this right now, sell it right back, make the spread the way that this is set up right now, and it does it in 2 milliseconds or whatever, and makes the spread. It does that 500,000 times a day, whatever. I obviously can't do that. So any algorithm that a retail investor is going to build, you could build an algorithm that makes you, I don't know, with reasonably small money, you could probably build one that carries out a strategy that makes you 100% a year for a few years or whatever. But algos they can't make discretionary calls, at least not as well as I can. And I like to trade. A lot of people, they want to build a robot because they don't like trading. It's like, well, then go make money somewhere else. Use that to build automation robots for a different kind of business. Because if you don't like sitting at the screen, the robot's going to underperform anyway. And you probably don't have enough experience to even build an effective one anyway, because you hate sitting at the screen. So right now, just waiting for this little range here to play out a little bit better. I mean, again, I'd like to scalp inside of the range, but it's so tight right now, it's not even really leaving room. Maybe it's leaving 10 points, but in order to get that, I'd probably have to risk 25. So the light's still red for me right now, waiting for it to open up an opportunity. Benjamin, can you explain the ATR and how you use it on the 2-minute? It's just volatility. Just volatility. I'm not using it in some super secret way. I'm looking at it to say, okay, if I'm entering with a scalp that I expect will take 5 minutes or less, and I'm asking for 80 points, is that reasonable? Right now, the average range of a 5-minute bar is 35 points, 34, 35 points. No, that's not reasonable. That doesn't make sense. You just gotta do things that make sense. Eduardo, man, I'm telling you, this is your problem. He says, I feel that. I'm in so much debt. Stop telling yourself you're in so much debt. I don't care how much debt you're in. Just think so fucking big that it doesn't matter. If you expand your goals to the point where it's like, it just pales in comparison. Everyone they'll have, $8,000 in credit card debt and be like, oh my God, I'm drowning. It's like, I get it. Right now it feels like you're drowning, but just outthink it so big that you're like, it doesn't matter. I'm going to put so much fucking into this that it'd be unreasonable to not make 18 million. I don't care if it's 8,000, 800,000, 8 million. I don't care how much debt you have. There are endless stories of hedge fund managers going belly up, being 8 billion in debt, coming back and being billionaires again in 6 years. Do you think that's a coincidence? You think all that was on inside info? No, it's the mindset. It's the desensitization to numbers. It's the whole thing, man. You have to think huge. Go bigger. Stop telling yourself, I have so much debt. Yeah, no shit, because you can't even figure out how to make sense of it. You don't have to have the answer, man. Just have the mindset and the answer comes. But then you got to get up and get to work. And put so much into it that it's like, you know what? Not paying this off would be so unreasonable that I'll just cross that bridge if that bridge comes. And you'll usually find yourself with a clean slate and a lot of money in the bank because you put so much into it that, yeah, it would have been unreasonable for you to not make that times 100. All right, Let's see if we can break out of this trading range. This trading range is starting to piss me off. Look at this. 2-minute chart, real wiki, man. Range of about 30 points. We'll get out of this at some point, and then we can start putting trades on. All right, well, I'm going to use my secret move here. I'll be back in 2 minutes. Surely it'll break out while I'm gone. It always seems to. So I'll be right back. I'm doing this for your guys' sake, all right? I'm the hero here. All right, back in 2. Well, it's trying to expand the volatility. Man, that one always works. A little bit more volatility. You know, the ATR is actually staying reasonable. It's still in the mid-30s. Last couple bars fell to, 20, 26 on the range. This last one back in the mid-30s. That's the danger with these ranges, is that the volatility can just collapse so quickly and it's hard to get it back. But it's actually staying reasonable here, which is fine. So when you get this big push like this, especially lately, we've been seeing this again. This changes based on market environment, but in the current market environment, we've been seeing this turn into a trading range. Again, we talked about this on like this bar. Just so predictable. Isn't trading just so easy? Move sideways and then again 50-50 whether you get a second leg higher or push lower. Now in this case, I got to tell you, with the higher highs, higher lows, 20 EMA here on the 5, the probability is probably more like 52-48, 55-45, but I still call that 50-50. Sticking right around 22. Again, it's a tier 1 level. It's not S tier. It's not 20,000, 25,000, 15,000, but tier 1, most important after those. Again, the more you tap 22, the less crucial it becomes, at least intraday right now. There's really not any stops there anymore. Those have already all been taken out. Right now, what I'm kind of thinking here is if we get a push lower, maybe tap that 20 EMA on the 5, we get a small-ish bull bar closing near its high after that. I would get long for a return to the high of the channel. But this is just thinking out loud how to deal with this trading range, because these ranges can develop in a variety of ways. The only way to know is to let it happen and then trade the outcome. Question here, after I request a payout on Apex, should I stop trading? Yeah, I get this one a lot. So this is just a personal decision. Let me explain a scenario that I had happen once with, this was Apex. This happened with. I had an account that was just above the payout buffer. No, I'm sorry. It was at like, I don't know, it was like close to the max. Well, wait, let me think. it was enough above the payout buffer where I was like, okay, I'll just take the money and whatever, we'll move on. It was like a smallish payout. It was like $1,000 or something. And I requested it, and what happened was, like, it hadn't been approved yet. Like 2 trading days later, I had lost like 2 or 3 trades in a row, and it was actually below. And I had won like the day before, but then the next day I had lost 2 or 3 in a row. So it was like 20 or 30 bucks below the buffer of the amount that I requested. So technically it should get denied because there wasn't enough money in there to approve the payout. What was really interesting was, I don't know if this was a coincidence or if they waited, but the approval took longer than it almost always does. And the account ended up back like days later. It was like well back above the thing. And then they approved it. So it was almost like they could have easily denied it. But they didn't. They waited. It seemed like they waited days longer than they normally would. And then they approved it. So it's almost like they did me a favor. I don't know. Should you stop trading after you request payouts? I mean, look, if you request a meaningful amount of money to you, let's say across all your accounts. Okay, let's say this. Let's say you have 20 Apex accounts and you request payouts in 12 of them that add up to a meaningful amount of money, and you think they should get approved, you didn't break any rules or anything. I'd probably personally, if I were you, I would probably just hold off, let it get approved, and then once they're approved, you go back to trading those. In the meantime, you trade the other 8. Okay, because again, you had 20, you requested 12. If you're requesting an amount of money that's just like adding to the pile, and it's not like meaningful, and the opportunity cost for you to stop trading is more expensive based on what your expectation is of continuing to trade than the amount of money that you requested, like in the case of that account with the story I just told you, just keep trading. The opportunity cost is too great. Again, personal decision. If it's a meaningful amount of money to you, don't trade those accounts for a few days, wait for them to get approved, and then go back to trading them. If it's not an incredibly meaningful amount of money, it's just adding onto the pile, then, you know, don't give up that. There's opportunity costs involved that you need to think about. But I mean, you gotta understand, guys, like Apex, when people go on Reddit and they're like, Apex denied my payout, I hate Apex, they probably broke rules. When you don't break rules at Apex, like Apex wants to have winners, otherwise they have no product or service. They have nothing to promote otherwise. It's in Apex's best interest to have winners who are making a lot of money, who are playing by the rules. They crack down, though, when people are making a lot of money, not playing by the rules, abusing the system, because that is not good for their business model. Makes sense to me. Again, which is why, you know, in my case on that one account that one time, I kind of feel like they held off to say, let's give him a couple days. See if he gets it back up, and then they're like, okay, he's back up, approve. All right, 45 seconds left here on this 5-minute bar. You can see finally we broke this to the downside. I'm very curious to see how this closes, because you can see we tested essentially the 20 EMA here on the 5-minute, and we're now getting a small wick back upside. So I know the bulls are watching that, trying to hold it. Let's see if they can. See, there's a lot of hesitation here. I know the bulls are watching. The bears are trying to break downside through the 20 EMA. Again, I really hesitate to always be talking about an EMA because I really don't care. The only reason I care at all is because I know other people do, and you can see, prime example right here, the bulls are stepping in right ahead of the 20 EMA on the 5. And it's enough to hold it up, at least for now. The bears obviously want to see that broken, because if we can break that, then the last thing left is the 50% retracement zone, which is bears, buying back their shorts that they averaged into earlier this morning at break even. But 3.5 minutes left here on this bar, and this bar here is likely to be an opportunity for me in either case, unless it turns into a mid-range close like a doji. All right, 2 minutes here on this 5-minute bar. Now you got to remember when you're looking at a trade, a lot of people like to forget that probability at best is going to be 70-30. In a range market, at best, is going to be 60-40, maybe 65-35. So there's always a counter argument to your trade. Right, so when I'm looking at this thinking, oh man, the bigger this bull bar gets, the less interested I am. When I'm looking at this bull bar thinking, yeah, let's see if I can buy the roll over here back toward the top end of that channel. You have to consider that, hey, the bears are looking at this as a potential descending channel forming. We're going to break through that 20 EMA and turn this into a descending resistance with an aggressive downside ascending support that's just barely holding on. That's what the bears are looking at. Now, this bull bar is getting bigger and bigger and bigger, and it's eating up all of that range. There's 50 seconds left here, but that was my zone to be in the money. Ideally for me, this bull bar would have been closing like here. When you get back up into the middle of the range, probabilities start to fall. You guys see my concept here, right? I mean, clearly, big push, trading range, you get an aggressive push downside, at least an attempt. Come right back into the range. This is a breakout attempt, right? Failed. At least for now. Back up toward 22,000. ATR, by the way, we're holding on, man. It's holding on to 34, which is, that's very good to see. I mean, when you see ATR start dumping off to 22, 19, less on the 5-minute chart, that starts causing problems. I mean, this zone, guys, I mean, here, let's look at this. I'll show you what I'm looking at. This zone's going to be a little slower. First of all, we have 22,000, right? The bulls are looking at this. And they're like, well, let's at least test that. But the bears, they're going to be looking in like, well, you know, somewhere in this region, this is going to be a thing. Because they're looking, what's the bears' goal? Form a descending channel, break the 20 EMA, fall off a cliff, test the lows. That's the goal of the bears. The bulls right now are looking for a slow grind higher / second leg up. And since this channel, the breakout of it failed, it's still relatively intact, right? I don't want to just draw a million lines because it'd be meaningless. But right now, it's indecisive. Let's leave those for now. Taking a trade right here, you know, to me, it's kind of a coin flip. I need a bar to close in a more definitive manner and tell me who's going to win this little argument. Again, middle of the range, we're at 22,000. The bears have an argument, valid. The bulls have an argument, which is also valid. And they're both going to think they're right until one or the other, you know, makes a move that's slightly more definitive. That's why we're seeing this doji here. Okay, we've got a minute 40 here left on this bar. If this turns into a nice bear bar closing near the low, I gotta tell you, I think I'm gonna slap on a short and look to sweep the lows and take a bet that the bears are gonna actually succeed in turning this into a descending channel. But this bar needs to close beneath here for me to take that bet. And I just risked that little curl. Come on, somebody make a decision here. This thing cannot make a move. Around 22. We're gonna get rid of this because that was never really definitive anyway. It was more like a look. Like, hey, the bears might be looking at this. There's the rollover. You have shrinking bull bodies. John, as we wait for this, Arnold press for shoulders, what tier? It's not that simple. You know, 8 years ago, they felt really good for me. As I put on size, maybe mobility changed, and I'll throw them in, you know, a few times a year, but they don't feel as good anymore. I don't get the right, I don't get the right squeeze. I don't really get as much of a pump. Maybe it's because I got stronger and I have to go up in weight and now it doesn't feel right. As you put on muscle, your body changes. The dynamic of movements changes. Movements that used to feel weird now feel amazing. Movements that used to give you a great pump, now you don't really feel as well and just cause pain. For me, over the years, they've fallen. I think for a lot of beginners who have a lot of mobility and maybe not as much muscle as they will in the future, maybe they'll work better. Of course, you could say, well, Arnold was obviously huge and he was doing them. I don't know if he was really doing them as consistently as everyone seems to think. There's like a couple videos. The reality is, you know, you don't want to be front delt dominant. It's kind of a weird look. So for shoulders, the lateral raises are always going to be S tier. $22,000, man. This thing is a pain. Nico, how tall are you? I am 5'1". Just kidding. I'm 6'6". Well, go spread around the internet that I'm 5'1" and just watch the world burn. Come on, 22. This thing is just a pain in our ass, man. Chris, cable or dumbbell? I assume you're asking about lateral raises. I do both. Switch it up. I usually end up doing a variation of both for lateral each time I train shoulders. But start with dumbbells 1 day or 2 days out of 3, and then switch to cables. On cables, almost always on cables. Sometimes I'll switch it, but on cables for laterals, I'll usually go really light. Like with shoulders, don't have an ego. Shoulders respond really well, at least for most people, to light and hard squeezing, and just push as much blood as you can in there. It's a little different for like leg training and back training, but shoulders respond really well to just pushing blood. Which is especially, you know, the dumbbells you can go a little heavier, but with laterals on cables, man, just go light and squeeze. Go slow. Middle of this range, man. I kind of, you know, when we get breakout attempts that fail, I tend to kind of cut those out of my thought process here on the range. So that puts us kind of in the middle of the range, really. Which you can see these bodies are starting to get smaller. All right, finally getting some movement here. Let's see what the bears can do. We have 3 minutes and 5 seconds left here on this 5-minute bar. Coming back into the 5-minute 20 EMA. So something I'm paying attention to. You know, people are looking at that little wedge. I want to see that break downside. If we can get a nice bear close down here, I would look to get short, even though probably, you know, that would probably put us, I don't know. It's like, well, how would most people draw this? Probably like this. Don't overthink it. Don't say, well, actually, you should draw it like this. Just draw it how you think most people would see it. I can't stand having this many lines on my chart. So let's do this. And I'm really hoping that this here busts downside and gives us some kind of opportunity here. Yeah, you know, Peter, a lot of people are going to be on forums, message boards, Discord chats saying, war's coming, man. Get short. This market's going to dump 50%. It's not surprising enough for the market to move really much at all. The market cares about what it didn't know prior. If the market can make an assessment on something and kind of assume things, then when the news actually hits, it's old news. The market's really, really efficient. You think about it, right? We're dealing with a massive sample size of some of the brightest people on the planet. When you have a lot of hints for things, when the actual news hits, yeah, you might get a move, a few hundred points, maybe even 1,000 points. But when the market sees things coming and it ends up being reasonably correct about the thing, it's usually relatively baked in. Avoid trading the news. It's a game that I don't think retail has a prayer at winning. I think retail's best served just trading the price action. And if the market crashes, don't say the market's crashing because of war. Look at that and say, bear trend day. Get short above anything, get short below anything. Put a stop in a reasonable place and look for a huge reward to risk. It's also a very frustrating game, by the way, to try to trade news, because when you end up inevitably being wrong 50% of the time because the market's really efficient, it's just gonna piss you off. You're gonna say, why would the market not crash? You know, we're going into World War III, blah, blah, blah. Because the market's really efficient. Just trade the price action. It keeps you a lot more level-headed too. It's more of a puzzle, and if you're wrong, it's more of a question of, wow, you know, it's really interesting. I didn't see it that way, but now I do. I was just wrong. Whereas with the news, it's kind of like a ripping the Band-Aid off really, really slowly, and it's more frustrating to be wrong because you think that it's obvious, but it's not. All right, let's see if the bears can break beneath this 20 EMA here on the 5. Got to be careful here, range market. Most breakouts are going to fail, so meaning if I can see a close here, and I get short, you know, reasonably, we saw a 20-point push. So again, it's not an exact science, but within reason, maybe we could see this push down to like 30s. So then you got to think, well, what's the risk? Yeah, 35 points to make 35 points. You could tighten it up by risking just the signal bar, but then the probability goes down. That'd be reasonable, as long as this bear bar didn't get too big. Again, scalp, I'm more interested in, or I guess I'm more willing to go negative reward to risk because probability increases when you're just scalping. Okay, 3 minutes, 12 seconds left here on this 5-minute bar. see if we can get something put on. You know, another benefit here is there's probably going to be some stops, some sell stops below this curl because it's the most obvious place basically the whole day aside from here. So I don't want this bear bar to take that out first. I'd prefer to be able to get short. But then once we go through there, then you got to make a decision because it's like, well, we're probably not going to go much further than the 30s. And that'd be a much more sizable move, at least not quickly. Right, of course, throughout the day we could, but more of a scout mentality here. Let's get rid of this. We'll leave this. We just got a headline coming through probably about 5-6 minutes ago. It says Iran is likely to attack U.S. military facilities in the coming hours. That's coming from Iranian media. Michael, morning Nico, blew a funded after 2 payouts. Hey, that's okay, you gotta return. You gotta return, that's what matters. Blowing fundeds, even when you're scaling horizontally, listen, it's part of the game. Okay, don't feel bad about it, it's just you hit that statistical streak of losses. Almost funded on another account though. Ooh, come on, come on. Oh, man. Oh, it just took out my stops. Not my, stop loss, but I wanted to use these stops. See, what I really wanted is this bear bar to close here. Son of a bitch. I wanted this bear bar to close here and use these stops. Yeah, it would have worked too. That's all right. An entry there would have been a rule break for me. All right, now we came down, we tapped almost 30, which, by the way, was exactly the region we thought we might see buying power, buying pressure, and here we are, bouncing back upside, so that's okay. An entry here was too late for my plan. Had this bear bar closed about here, I'd have sold that rollover. I just want to hit a market order because I don't care. I just want to get in for the takeout of these stops. You're already, 8-10 points in the money. At that point, you take them out, you get another 10-20 points on these stop orders getting triggered because those are long stops, right? So they're sell market orders. Sell at any price, get out, pushes you down maybe another 15-20 points and you can get out right in the 30s. It just didn't align properly. Would have worked well had it aligned for me. I mean, this is very clearly turning into that. All right, I am interested in scalping this little range. Not inside of the middle, like, third. I'm not interested in the middle third. But outside of there, I'm interested in scalping the range. Basically, just stay as dumb as I can and scalp this range is my thought process now that we're seeing more development here. Until that changes. All right, back in 2. Don't go anywhere. All right. Again, I'm still just looking to scalp this little channel, but not in the middle third. The middle third probability is too close to 50-50 for me to partake. This is institutional algo territory. You're in the middle third. You'll do it, Patel. You know, you'll do it. I think a lot of people look at it, they're like, they wouldn't say it, but they genuinely don't really feel like they're worth $1 million. You can barely even retire off of $1 million today. You guys seen the prices of anything? Any lunch that you go out to, any lunch, even in cheaper markets around the country, you go to lunch, man, minimum, 2 people, minimum, it's gonna be $100, minimum. You go in a more expensive market, it's gonna be $1,000 lunch. You do that 1,000 times, that's $1 million. $1 million is not what it used to be, man. Every one of you is worth $1 million minimum in my head, even if you have barely done anything yet. You need the only answer. The answer is not to scrimp and save. Your parents, your grandparents, they grew up in a different world with different opportunities. They didn't have the internet. The answer is not to save. The answer is to make more money. You have every opportunity in the world to do so. We couldn't do this 50 years ago. Could you imagine? Yeah, Joe, lunch in Miami, man, 200 to 500, easy. Easy. You go out to lunch, half reasonable restaurant. You want to go to Smith & Walensky's for lunch in Chicago? It's going to be $300, $400, $500 minimum. Come on, man. Such a basic thing. Go out for a nice lunch. You just got to make more money. That's the only answer. All right, the bulls are starting to lose steam here, man. They're starting to lose steam. It's starting to look more and more tempting to bet against this channel here, but let's see. They can't even bounce it past the middle of the channel anymore. Gotta remember that 50% retracement zone for the shorts who averaged in on this move, thanking their lucky stars getting out at break even. That's kind of the last thing of interest here, but this channel's still in play. We gotta watch it. And you see this channel's starting to tighten. It's just the same thing over and over again. I mean, you guys, if you've been watching the stream for any longer than even like a week or two, we see the same thing over and over and over and over. You see this big channel? Oh, one side starts to weaken. In this case, it's the bulls. And you start to see these kind of mushier and mushier bounces, which tend to lead to a break. Now the probability starts to get interesting the longer this goes on. As far as getting short and like even in the lower third of the channel, it's kind of tough to do that. I think it's a little bit premature until we see a break. Because again, we got to remember, we still have that 50% retracement where we're going to see a lot of shorts who averaged in earlier today on that big move on the left of your screen, buying back at break even, which is buying pressure, right? ATR is starting to creep down into the around 30, by the way. It's dipped from about 34, 35 down to 30, but I mean, it's holding on reasonably well. Again, that's the average range here of a 5-minute bar. 30's not bad, could be better. But for this time of day, 30's all right, especially when we're in a range like this. A lot of times lately, when we enter a range like this, volatility collapses, and it makes our job a lot more difficult. I mean, we're reasonable here. You know, we're always just kind of one bar away here. That's the nice thing about the 5-minute chart is we're always kind of one bar away from taking a trade. But everything I look at right now, we're trying to make something out of nothing. I just need one bar to do something interesting, and we can take something here. Yeah, Joe, I've been looking at this. Okay, so Joe's saying if we can close kind of above, like, for me, Joe, I'd want to see it close above this wick here. I mean, that gives us 20 points, but I'd be risking the curl. So risk on that would be damn near 50 points. Which, when you start getting less than 1 to 2 reward to risk, even scalping, things start to get a little weird. I think you have to be a little bit more sure of the probability. You can do it. I will do it. It's just in the middle of the channel here. I'd prefer to keep it to a minimum of 1 to 2. Because probability in the middle of the channel is never going to be, 70%. Oh, I see, Joe. Risking the signal bar? Yeah. You're thinking about it the right way, though. By the way, guys, Apex, I know you guys are wondering, 80% off at Apex and single day pass, which means you get 80% off and you can pass in 1 day and be funded tomorrow. That deal with code BIG ends in about 1 day. Okay, so if you're looking to get more Apex accounts, now's the time. This here is so tough. Man, if you walk away today with anything at all, when you're seeing this, don't be putting a trade on here. The market itself can't even decide which way to go. We're just seeing failed breakout after failed breakout of this tiny little, 5 or 6 point range. Don't be putting something on here. There's nothing here as far as good probability. Now, you can make an argument for, getting short up here, Getting long down here. Even then it's a little tight, but that would be a much better trade than just putting some on right here. At least here on the 5-minute chart. But a lot of people do. They take trades, you know, right here. They're like, it feels weak. I'm going to put this on. And they get chopped up. Markets have inertia, right? The probability of it going sideways before it breaks higher or lower is higher. So more often than not, you're going to get a few more sideways bars. And what happens then? What happens is you get chopped out. Your life gets a lot easier when you just take things that are reasonable probability. Jacob, good morning. How you doing? Oh no! Climbed from a deep hole, now 865 in profit. Good work. Good work. It's always good to see someone keep their composure in the red and come on back. Even if it's just to less red, man. That's a big deal. But going from red to green is good. The secret here though is when you go from deep red to moderate green, don't get too high on it. Just say, okay, I did my job, worked out in my favor today. Maybe it won't tomorrow, but that's tomorrow's problem. Just execute your edge, guys. This isn't a complicated process. It's just hard. But the more you do it, it gets easier because you have more and more proof that what you're doing works. So, you know, I mean, I get it. You know, the market, it looks really weak right now, but you gotta pay attention again. Top left of your screen, that's the 5-minute chart. Same chart we were just looking at, just a little more zoomed out. The 50% retracement is coming near. It's pretty damn close. And you're gonna see shorts who averaged in on that big move, adding some buying pressure. Now, will that delay the inevitable dump off? Maybe. Will it be enough for the bulls to gain some traction and pull it back up at least halfway into the existing range? So maybe, you know, you get a 50% retracement-ish on the whole move of the day, this region here. Maybe we bounce it back up here. You know, it's tough for me to just get short here and close my eyes. Because we're in a channel, and we're also nearing the 50% zone. Now, if we can clear both of those and get a closing bear bar like here, that's when I start to say, in this region, okay, I'll get short, I'll close my eyes, I'll risk what makes sense somewhere in maybe like this or the signal bar, and look to take out some stops on the low of day. But before that, there's a lot in the way that I need to see get cleared out. But that would justify a bigger swing for me. You look for about 100 points. Chris, Nico, is a sample size of 30 trades enough to adjust your trading plan, or does one need more? Yeah, Chris, I don't know. I need to see your data. The real answer is it can be enough, but in some cases it's not. I would need to look through your data, which I do with all my one-on-one people. All right, guys, we're going to see a break here, but I need to wait for that to happen, and then I'll slap something on. I'll tell you what, I'll see you back here tomorrow morning. We had kind of a slow start to the week last week, too, but hopefully this afternoon gives us something a little bit more definitive. All right, guys, I'll see you tomorrow morning. Be patient, wait for it to come to you. And when it comes to you, can't be scared to slap your plan on. All right? All right, guys. Hey, see you tomorrow.